Hello, accounting students. So today we'll be doing tangible asset, also known as fixed assets. Therefore, you are provided with Goody Shoe Traders. You are provided with the relevant information for the financial year ended on 31st December, 2023, right? So now your accounting period ends on 31 December 2023. So the first question is for you to calculate the total depreciation on equipment for the year ended 31st December 2023. So given information, you have the following balances appeared on your trial balance. And then vehicles, it's 2,680,000. And then equipment, it's 810,000. So you have the following accumulated given below. Right. So now remember the first question was for you to calculate depreciation on equipment. So given information P, so information P, you have the following asset, which is new equipment with a cost of 120,000 was purchased on 1st December 2023. So there were no entries made on this asset. However, equipment is depreciated at 20% using what cost price method. Right. Guys, the following formula for cost price method, remember, cost price method, it's A, right? It's A multiplied by T multiplied by R. So it's amount multiplied by rate multiplied by time. Right. So the amount of the asset was given as 120,000. So we have the new asset costing 120,000, right? Remember our formula, it's art. Therefore, the rate of the depreciation was 20%. So meaning we'll say 120,000 multiplied by 20%, right? And then you multiply by so now you calculate the months. So it's gonna be 1st October up until the 31st of December, which is how many months? So it's basically 3 months. So now the value of your depreciation, it's going to be 6,000. So now we have this on our answer book. The same calculation still, it's our 120,000. Then you multiply by 20%, right? And then you multiply by, remember, it's 3/12. So therefore, our depreciation was 6,000. Right. So remember, every time when we calculate our depreciation consists of sun, right? Therefore, what do I mean when I say sun? S, it's for what? Sold, right? And then O, it's for old. And then N, it's for new, right? On behalf of our equipment, remember, first things first, we are calculating what? Equipment. Therefore, so remember, our equipment bought, meaning new asset, depreciation of that asset was what? Was 6,000. So our new asset, it's what? It's sorted. Therefore, there was no asset disposal on behalf of equipment. So we don't have sold. So sold, it's going to be 0. So now, every time, whether we are calculating the depreciation of a new asset or sold, you need to calculate depreciation on old every time. Whether you sold an asset or you bought an asset, the depreciation of your old is always required. So now, remember, our formula for cost price method, it's what? ART. Remember, ART, it's what? It's amount times rate times what? Time. Then Your adjustment stated that there were no entries made on what? On that new asset costing 120,000. So now the cost of your old equipment is going to be 810,000 given on your trial balance. So it's 810,000 and then you multiply. Remember our rate, it's 20%, right? So now that it's old, so meaning old, now it's going to be 12 over. So it's 12 over 12. Then our depreciation for old asset, it's 162,000, right? So remember again, here's our answer book. The very same calculation, it's going to be 810,000. Then you multiply by 20%. And then always old, it's going to be 12 over 12. The value of your depreciation, it's 162,000, right? So now we have our old depreciation. We also have our what? Our new depreciation. So now the question was for you to calculate the total depreciation. So our total depreciation, it's going to be 162,000. You combine your 6,000. So therefore, our total depreciation will be 168. So it's 168,000. So calculate the depreciation on old vehicle for the year ended 31st December 2023. Right. So for 2.1.2, you need to complete, basically you need to do your fixed asset register, right? So we have our fixed asset register. Therefore, you have the cost of that asset, but it was 320,000. And therefore, when we look at information C, one of the delivery vehicles was sold for 190,000 on 1st July 2023. So that 190,000, it's what? It's our selling price. So that 190,000, it's our selling price. Okay. And then the vehicle was purchased on 1st December, I mean on 1st July 2021 for 320,000. So meaning our cost of asset sold, it's 320,000. So our cost, it's 320,000. Therefore, depreciation is written off at 10%, right? 10% using the diminishing. So using the diminishing balance method. Remember our diminishing balance method. Okay, the formula of diminishing, it's cost. So it's cost minus accumulated. It's accumulated depreciation is equals to carrying value. And then after you multiply by %, you multiply by period or time. So that's our formula for diminishing balance method. So now, date. Remember, the asset was purchased on 1st July 2021 up until 31st December 2021. So now we have our current depreciation given here as 16,000. Therefore, our accumulated also, it's going to be 16,000 because it was bought on the first year. Then our carrying value, remember carrying value, it is cost, right? Minus accumulated depreciation. So now our cost was given as 320,000. So you will take your 320,000, you minus 16,000 to get our carrying value of 304. So it's 304,000. Right. So meaning that 304,000, we will use 304,000 to calculate our depreciation for 31st December 2022. So now current depreciation for 31st December 2022, You will take that 304,000, right? And then you multiply by 10%. Remember, this asset, it's for 12 months. So you multiply by 12 over 12. So meaning our depreciation will be 30,400 for 31st December 2022. So now you will have 30,400 here, right? So now, how then do you calculate your accumulated? So accumulated, remember, accumulated depreciation, it's an increment or increase of your depreciation. So now, first year, you lost 16,000, right? And then second year, you lost an amount of 30,400. So all in all, the amount, it's going to be 46,400. So now it's 16,000 plus 30,400 to get your accumulated depreciation of 46,400. Again, carrying value. Now your carrying value is going to be 320,000. You subtract your 46,400. Then our carrying value is going to be 273,000. Right. Okay. Now, remember the asset was sold on 1st July 2023. Then our period starts on 1st January. So it's 1st January 2023, right? So now from January up until the 30th of June, the date of sale, remember you sold this asset on 1st July 2023. That means, Wuti, that asset, it's no longer there. So from January up until June, it's how many months? It's 6 months, right? So to calculate your depreciation for July 2023, right, you will do the following calculation. So remember, our carrying value was 273,000, and then you multiply by 10%, right? And then you multiply by 6 over 12. 6 over 12. So our depreciation will now be 60,000. So it's 60,080. So it's 60,080. No, our depreciation is going to be 13,608. Apologies for that. So now our current depreciation on 1st July 2023, it's going to be 13,608. Then again, it's 46,400. You combine that 13,680. So meaning that 60,080 will be your accumulated depreciation. So you have 60,080 as accumulated depreciation. Right. Again, carrying value, it's 320,000. You subtract that 60,080. So meaning our carrying value, it's going to be 259 920. So it's 259,920. Right. So that means for vehicles, again, vehicles, under vehicles, you also have what? Sun, right? So now our assets sold, the depreciation of sold, it's going to be that 13,000. So it's 13,600 and what? And 80, right? So there was no asset bought on behalf of vehicle. So that means our new asset is going to be 0. We need to calculate our depreciation for old using diminishing balance method. So I'm going to give you the formula for that. So our formula is going to be it's cost at the beginning minus cost sold Then you'll get what cost remaining, right? So now remember our cost at the beginning was 2,680,000 minus cost sold. Remember our cost sold for vehicles was 320,000. So you will subtract 320,000. So what is left? Now it's going to be 2,360,000 as our cost remaining, right? So now we have our cost of 2,320,000. The very same formula that was used for cost, you need to apply this formula again on accumulated. So now still it's going to be accumulated. So it's accumulated depreciation at bag minus accumulated depreciation sold, right? Therefore, you will get accumulated depreciation what's remaining, right? So now our accumulated depreciation at the beginning for vehicles was here 1,060,000. You subtract accumulated depreciation sold. Remember, our accumulated depreciation sold, you take the second year on your fixed asset register. So our accumulated depreciation was 46,400. So you will subtract 46,400. Then what is left? It's going to be 1,013,600. Right. So now you have your cost remaining of 2 million. You also have your what? Accumulated depreciation remaining. Thereafter, remember, you are using diminishing balance method. So now it's going to be cost of what? Remaining, right? So it's cost remaining. You subtract accumulated depreciation remaining. And then you will get your what? Your carrying value. Okay. So our cost of asset on behalf of vehicles that was remaining was 2,360,000, and then you will subtract 1,013,600. So what's our carrying value? So our carrying value is going to be 1,346,400, right? So now we have our carrying value of this amount, and thereafter you calculate your depreciation as required. Depreciation on these vehicles was what? Was 10%, right? Remember our old always it's 12/12. So meaning our depreciation on old asset it's 134,640. So now we have our depreciation. This is depreciation for what? For old, right? So here on this space, so depreciation for old, the calculation will be that carrying value of 1,346 400 multiplied by 10%, then you multiply by 12/12. So now it's going to be 134,640, right? Remember again, depreciation sold on vehicles, it's under your fixed asset register. That current depreciation on 1st July 2023, it was we got 13,000. So it's 13,680. Right. So the total depreciation for the year ended on behalf of our equipment will be 148. So it's 148,320. Right. So now we have our depreciation on equipment both combined amounted to 148,320. Now, let us verify whether do we have the residual value of this asset sold, which is vehicles. So now, how do you then determine whether there's residual value or not? You will take your cost, right? So it's cost minus accumulated to get your carrying value, right? To get your what? Your carrying value. So the cost of these vehicles was 2,680,000 minus. So you will minus 1 million. So you will subtract 1,060,000 as our accumulated. So meaning our carrying value is going to be 1,620,000, right? So now we have our carrying value of 1,620,000. Now, remember I said, how then do you determine whether you have the residual value or not? So your carrying value, if your carrying value is higher than your depreciation of your old. So for vehicles, depreciation for old vehicles was 134,640. So if ever your depreciation is higher than your carrying value, that means your depreciation are fully depreciated. So now the formula for depreciation will now be carrying value at the beginning minus 1 rand is equals to what? Your depreciation. That's how you determine whether there's residual value or not. Remember, to verify things, it's what? If your depreciation it's higher than your what? Your carrying value at the beginning, guys. That means your assets are fully depreciated. Therefore, here's your formula to calculate depreciation for what? For old. Only old. Residual value, it's only for what? For old asset. So now you do see that our carrying value at the beginning, it's higher than what? Than our depreciation. That means now the asset, it's what? It's sorted. So now there's no residual value on behalf of vehicles. So I hope the session was therapeutic as usual. Have a good day.